Heavy AI investments and tariff uncertainty putting pressure on some of the mega cap tech stocks over the last month. Joining us now, Doug Clinton, Intelligent Alpha founder and CEO. How bad has it been, do you think, Doug, on a scale of 1 to 10? We had a technical analyst on yesterday that basically said that has been a group not to really be in, and if you were just looking at tech, you might not be as bullish. And financials, great, others, great. But as far as tech goes, you might not be bullish on the overall market because of the action. Is that true?
We're still bullish on tech, and I would say on your 1 to 10 scale, Joe, I think DeepSeek Monday, 2.5 weeks ago, that was probably about an 8.5 or a 9. That was a pretty rough one. But I think since then, we've had things calm down a little bit. We've heard from a lot of the hyperscalers in terms of earnings. We've heard from the hyperscalers and from Sam Altman and others in the AI industry that this CapEx boom is going to continue. So I think the last couple of weeks have been much more stabilizing, and the next big event will be NVIDIA earnings in a couple weeks.
So anything that's AI related, but I mean, we've really only been focused on that for a couple of years. It used to be the Magnificent Seven wasn't always based on AI. So it's all AI now. Is everyone leveraged to the same extent, or some could do better? Some are more, if there was some type of disappointment, there's some that aren't as dependent on AI. What's going on with Meta, for example?
I think there's tiers in terms of the hyperscalers and how levered they are to AI. Meta, to your point, which is a holding in our LIVR ETF, as an AI play, they are highly levered, right? They're one of the leaders in open source AI with their Llama model. And so they've been using AI to improve their business. They've been building AI models to introduce to customers. Google, obviously, and NVIDIA are also very heavily tied to AI. But if you're looking for hyperscalers that have maybe a little bit less exposure, I think Amazon and Apple are probably the two answers there, although we did just see Apple made a deal with Alibaba, which was interesting, in China, to bring their AI models onto the iPhone in that region.
So in terms of tariffs and everything else that we're talking about on a daily basis, these totally immune, or is that something to pay attention to?
I think you have to pay attention to it for the hyperscalers as it relates to tariffs, but I don't think you have to have, a kind of a 5-alarm concern about the tariff issue here. I mean, these companies, by and large, I think can get away with not being overly impacted by tariffs because they aren't really subject to some of the, I think, import and export issues that we're seeing with the tariffs, and they won't likely get hit with much of the tariff activity. And so I think from our perspective at Intelligent Alpha, we're paying attention to the story, but we're paying much more attention to how are the AI products that these companies are building evolving, how are the customers adopting them. I think that's much more important for the stocks.
I mean, if China was, if it became a protracted trade war with China, that would be bad for some of these companies, very bad, I can imagine. I don't think that's really going to happen. I think, Trump, like he does so often, he wants to get something. And it may not even be that significant. It'll sound significant when he gets it. But do you see a protracted confrontation with China with the Trump administration?
I mean, I think if you look at Canada and Mexico as comps just recently, it certainly seemed like that was really more on the negotiating side. Not to say there won't be tariffs on those countries, but obviously both countries sort of agreed to change some of their border policies, and the tariffs got stayed for a month. And so I think to your point, Joe, I think that Trump is being a very hard negotiator here. He's not messing around. He wants to see action immediately. And so I would agree with the assessment. Like, I don't think it's likely that we'll have a protracted trade war. If you're looking for what might be the hyperscaler or the mega cap tech stock that could be most impacted by that, you probably have to look at NVIDIA, TSM, kind of how that region shapes out in terms of the chips that are produced there. They maybe have the most exposure if you're looking for that name. But again, I don't think that's going to be an issue in the next 12 months.
All right. So if I should buy, what's your top two that should be bought right now?
In terms of hyperscalers, the two that we own in the most size for our ETF LIVR are NVIDIA as our top holding, and then Meta in the AI space. But I think there's another play on AI that is also worth talking about, which is we've talked so much about NVIDIA. They're the bellwether. Everybody's paying attention to NVIDIA and what happens there. But I think that the theme around the chips that the hyperscalers and others will use to deliver this AI technology to their customers will shift to custom silicon. And we heard Meta talk a little bit about it on their earnings call last week. I think you could see companies like a Broadcom, like a Marvell, which is also a holding. They could benefit from this theme. And so as the year progresses, I think that's a theme that's worth paying a little bit more attention to, this custom silicon opportunity.
Okay. Let's start using that. Cocktail parties. Gotta start moving into some custom.
I'm sorry, Doug, what is that?
You say custom silicon, people think you're getting a breast implant.
Specifically for...
It's at least memorable. Yeah, it's custom.
Yeah. Huh?
You're making the chips directly for...
Right, making them custom made. All right.
Yeah, Google makes them TPUs with Broadcom, for example, and it's just a chip that's optimized for the algorithms that Google runs.